This podcast is brought to you by SDBullion.com. They've been friends of mine for over a decade. I trust them with my business. You should too. Visit SDBullion.com for more information. Happy Tuesday, TFMR. It's March 3rd. That'd be 3-3 on your calendar. And it is time for your daily podcast. A little earlier than usual. It's not quite 4 o'clock Eastern. New York Stock Exchange still open as I'm speaking. But that is because today's the day for Turge's annual trip to his accountant. So, I'm not sure which I look more forward to. Getting a root canal or going to see my boy Tim. Anyway, it is what it is. And I'll be charging out of here in about an hour to go have that annual meeting. Interesting day today, wouldn't you say? The overwhelming narrative, everybody always, sees what happens and then tries to ascribe it to something. The narrative today was that the war is inflationary because of the higher crude oil costs. And because of that, the Fed is now going to be hiking rates and not cutting rates. Okay, let's just assume for a second that narrative is correct. How might that change over the next 72 hours? How might it already be beginning to change? The yield on the 10-year note today hit 412. It was up 7 basis points after being up, 9 yesterday? Totally reversed, currently unchanged. 405. The yield on the 2-year note hit 359. It has totally reversed to being up 1 at 350. The dollar index went to a high of 99.68, which put it up about $1.30, 130 on the day, on top of yesterday. Well, right now it's 99.05. Now, metals have kind of recovered. The shares have not. But again, how much might that change? How much might this narrative change? Tomorrow we got the ADP jobs report, the service sector PMIs. Will anyone be paying attention to the BLSBS? Remember last month? How it was, a 6 Sigma beat or whatever? What was it? I don't even remember. 144,000 or something they claimed, where the expectation was like 44. How many of that 144 will be revised lower on Friday? My point is, and to repeat old TFMR adage number 1, it's not how you begin the week that matters, it's how you end it. And we're still a long ways away from the end of the week. Gold was up $64 yesterday. As I speak, it's down 214, getting smoked, of course, on the afternoon Globex. Now down 4% on the day. Absolutely. Actually, now that I'm recording this, it's plunging as I speak. Just a few minutes ago, it was 5140, and now it's 5100, dumping into the New York Stock Exchange close again. Anyway, moral of the story is, it's down, $150 on the week? Do you think you could make that back? Yeah. Yeah, I do too. Wait till I show you the chart. Further, today is Tuesday, which means there was a COTS survey today. Also, a bank participation report will be taken from that COTS survey. Won't this week's COT report be interesting? Because here we are again at the lowest open interest levels in either 7.5 years for gold or 2.5 years for silver. This is all part of why you're getting these extreme moves. Now, maybe this Jane Street has something to do with it. Why would you assume it doesn't, given their sketchy background and what they were doing to Bitcoin and the lawsuits that were figured out last week and everything else? As if silver's not manipulated anyway, right? Why wouldn't some trading firm get in on the act? But anyway, all part of that volatility is this record low, very near record low open interest. I mean, we're back to levels in silver that are getting down to where we were after the MF Global debacle. What was that, 2012? I mean, I remember back then it was like 105,000. I have to go back and look. We're 115. That's how low it is. Price back then, was 20, right? So a big volatile move back then of 5% was $1. Now it's, $6 or whatever it is. So anyway, it is, that's a big part of this. So we just don't have the depth and the breadth of market structure. So when all of a sudden somebody really wants to sell because the dollar's up a point again, down we go. And remember I mentioned to you last week, or maybe it was a week before. I'll show you again on the dollar chart. Overlooked in all of this, what was going on at the end of January. It was all Shanghai, blow off top, and all this other stuff. Remember, the dollar index fell 3 points in 6 trading days. All right? So you had all these algos doing the buying then during the COMEX hours, pushing things along, and then Shanghai opens higher again. What do you have now? Again, at one point today, the dollar index was up 2.5 points in 2 days. Merited? No. Oh, but it's a safe haven, don't you know? Is it? Well, it's always been. Times of trouble. Buy the dollar. And so that's what you get. I mean, we'll see. Maybe they're going to smoke us the rest of the week. There's going to be a big, ugly red weekly candle, and we're going to be worried about $70 support and gold back down under 5,000 and all this. Maybe. Again, it's how you end the week that matters. Let's just wait to see how we do, in fact, end the week. Okay? The war, again, my biggest concern here is it's about to get asymmetric. That the command and control in Iran has been now so diffuse that anything can happen. And will they go scorched earth, as I mentioned yesterday? Certainly signs of that overnight and earlier today, which is all part of why crude got all the way to 77. I had 20 calls on the UCO, by the way, heading into this weekend, or this week. 20. I sold 10 of them today when crude was about 77 and change. The news this afternoon has pushed it back to 74. So, and I'll tell you that news in a second. So, dollar's off its highs. Bonds are off their lows. Crude's off its highs. Maybe we can get a rally overnight and into tomorrow. We'll see. Okay, so what do we have on this page? A couple of links. I don't know what this rollingout.com is. I don't even know. I don't know who wrote this article. But if you want something, something called Bull Theory wrote this, for whatever that's worth. Anyway, it's the text of the article I want you to read about Jane Street's $1.3 billion silver bet fuels manipulation fears. Okay? Yeah, so is that part of it? I don't know. Maybe. Could be. But here's the general consensus. I found this link at mining.com. Again, analysts got to write about something. Hey, get out there and write an article about why gold's down. It should be up. It's a safe haven, don't you know? Why is it down? So staff writer for mining.com says, gold price falls sharply on war-induced inflation fears. Gold price declined sharply Tuesday. There's a stronger dollar and prospects for higher interest rates weighed on the safe haven metal. So again, that's the thought now. So what if the dollar stops going up tomorrow? Then what's it going to be? Or is gold just simply going to bounce back? And in the end, does this change? Any of this change? The general thesis, the debasement trade, what I wrote about in this year's Macrocast, about running it hot, Warsh, Bessent, and Trump, cutting rates on the short end, yield curve control on the long end. I mean, it's March the 3rd. I mean, what's it all going to look like by July the 3rd or October the 3rd? These are the things I'd like you thinking about. 6 images, 6 charts. All right, so here is to that Jane Street. I guess I cut off whoever it was that wrote this. A little bit of, again, this is from X. I'm sorry, I was trying to get the whole thing on the bottom, so I can't credit whoever it was that wrote this. So my apologies to whoever it was. But anyway, give you some more to chew on this whole Jane Street thing. Turning to the war. Again, the concern that I expressed to you yesterday is the scorched earth policy. Okay? I mean, there's components within Shia Islam. Remember all this? The 12th Imam that lives at the bottom of the well in Qom. The only way he can get his ass out of there is by Armageddon. And there's Ahmadinejad was one of those people, the former president of Iran, a believer, the Twelvers. Remember all this stuff? It was really popular line of thinking and concern about it 10, 15 years ago. So who's to say there aren't some of those people around with missiles in their hands? Anyway, all things to think about. The unknown unknowns of war. Excuse me. So then today, this afternoon, it came to this. Again, how disrupted is the energy flow through the Persian Gulf and around the Strait of Hormuz and out? Well, Trump announced today, effective immediately, I've ordered the United States Developmental Financial Corporation to provide, at a very reasonable price, political risk insurance and guarantee. Remember, we talked about this yesterday. And the CNBC people, the strait's not closed. It's not like it's got a gate on it. It's closed because you can't get insurance for not only your tanker, but the freight that's on it. So all I got to do is they're sitting trying to be out of harm's way. So with that as a bottleneck, Trump announcing not only insurance, but also, if necessary, the United States Navy will begin escorting tankers through the Strait of Hormuz as soon as possible. Do we got enough Navy to do that? I don't know. Anyway, and then this little bit of analysis at the bottom, and Luke Groman saying all these experts take a step back and explain why it will be much easier going to escort versus the Iranians, when it's reportedly not a fun time, versus the Houthis. And by the way, why are we doing this if the goal was, in the end, was, everybody says we're going to cut off China's oil. And now we're going to help to get the oil out? Anyway, whatever. It's all talking points that people can debate, I suppose. This concerns me. Now, I know many of you, it's just the Mossad and false flag and, hey, knock yourself out. If that's what you want to, but you can't assuage my concerns, okay? This idea of asymmetric warfare, scorched earth, take as many with us as we can, I think is a real thing. So anyway, this was, if you find this link from the Shortwave Observer, you can hear the message. They've recorded it. And it's a real thing. It's not made up. At this, maybe, I know some of you are shortwave aficionados. Go to this 7910 kilohertz and see if you can hear it. Because it was still going on. You can read the comments of this if you find the actual tweet. And again, Iran Foreign Minister says, we will engulf the entire world. Look, you can write it off if you want. Oh, yeah, false flag. Fine. But I would still tell you what I've told LT number 1 and LT number 2. Why don't you stay away from crowded public spaces for a while? Okay? Live your life. Don't live in fear. But as I've always taught them, you must remain situationally aware. You're in a crowded place, find the exit. Just don't sit there staring at your phone. Look around you. Be aware of what's going on around you. Now more than ever. 2 more. Again, this gets at the heart of what we do here. Gold falls as war escalates. As Tavi Costa says, you either anchor yourself in a clear long-term macro view or you get shaken out. That's what I tried to write in that article that was posted this morning. Okay, let's try to avoid the noise. If you're a trader, sure. Watch the hourly chart. And I'll show you some stuff here in a minute if you are. But from a macro perspective, I believe my thesis. And then finally, this is interesting. So just today, the Shanghai Gold Exchange stopped reporting trading volume and publishing silver inventory data. Well, that's interesting. And you can see that on buys, a little blue report. Well, they go from 1,500 metric tons down to 500 or something like that over the last 18 months. And now they're not going to report it anymore? Are they taking a page out of the COMEX playbook? Okay, 6 charts. Here's gold since the beginning of the week. Again, could never really get going on Sunday night. I want you to notice a couple of things. These are 5-minute candlesticks. See the taller volume bars at the bottom? Yeah, once again, they are all red. All of the volume has come during selling downside. And again, when you only have 410,000 contracts of open interest, the depth is more shallow and the moves get wider, which you can see on this chart. All these 5-minute candles of either $10 or $20 or even some that are $40 and $50. Okay? Same thing can come back up on the upside over the next 72 hours. But so far, again, you can clearly see the volume surges are all to the sell side. The other part of this, again, I'm not going to get too crazy trying to do technical analysis and chart formations on a 5-minute chart, but that's a pretty clear head and shoulder, reverse head and shoulder, isn't it? So we'll watch. 50-80 would be a very important level to watch overnight, right? 51-80 would be a very important level to get above. Right now, we're coming back. As I speak, I got 51.20. So just barely off where it was when I printed this chart. Look at the same chart of silver. Again, note the volume. The massive spike yesterday at the New York Stock Exchange Open. Again, another one just before 10 that bottomed it out at 87. Then there's spikes overnight. And then really kind of a pretty quiet day on the New York Stock or on the COMEX today. Here, note a double bottom. Again, we're not going to get too crazy on doing TA and all noticing patterns on a 5-minute chart. But if price can get back above 84 overnight, it could easily make a run to 87, 88 tomorrow. And we'd probably all feel a lot better about things because the shares would come back as well. 82.90 I have as the last. Okay, and then just to your updated charts. Look at this chart of the dollar. Again, soaring again today, but well off its highs. Again, now what? Just going back up to the top of the range? I'll remind you, as I said, from 19th through the 27th of January, it went from 99.50 to almost 95.50. Hell, that's 4 points, not 3. In what? 1, 2, 3 says 7 trading days. That's all part of why we had that huge run in the final 10 days of January. And now what have we been fighting since, especially this week? Again, the dollar index closed, 97.60? So it's up $1.50 on the week at this point. Let's see where that goes tomorrow. And maybe the economic data will derail that later in the week too. And at the end of the day, this is probably the most important chart I have for you in keeping you grounded and keeping your eyes on the prize. This is a daily chart of gold with a 20-day and the 50-day. Okay, I remember talking to you about this back in November. Those 6 candles holding the 20-day moving average. And then once it broke higher, price went from 41.50 up to 4,300. Came back, held the 20-day in December. Rallied. Came back, held the 20-day the end of December. Rallied. And then spent a lot of time in February either oscillating up and above, but essentially holding the 20-day. Where did we get to today? Holding the 20-day. So we start breaking down and taking out the 50-day, breaking down, taking out those closing lows from early February, we got a problem. Now we're making lower highs and lower lows instead of higher highs and higher lows. But for now, what has changed? What has changed? Nothing. You see this in silver as well, to some extent. Yeah, it did dip below its 50-day. It looked pretty bleak back on February 5th and 6th, but then it recovered, dipped below the 50-day again from about the 12th through the 19th, and then it recovered. Rallied all the way up above 95, found stout resistance like I kind of figured it would. And now here we are holding the 50-day again. That 50-day, 20 days, 83.01. 50-day, 84.29. Okay, we're below both, right? I got 82.74. But that's, again, that's not the end of the world. You can find instances of that. Spent all the entire month of February below the 20-day. Let's just see where we go from here. It is only Tuesday after all. And then finally, the GDX, which was frustrating all day. Why it is anybody would just be rushing to the X's to dump their mining shares on a day like today is beyond me. I woke up this morning to see the shares down 10%. It's like, what? What? Okay, yeah, gold's down 3-4% and silver's down 6-7%. Why would the GDX be down 10? Are they not making massive profits here this quarter? Are you just assuming now that gold's going to go back to 4,400 in the second quarter? And they're all going to make the same amount of profits they made in the fourth quarter? I mean, this is just nonsense. This is utterly ridiculous. But the machines are what they are. They dumped it out. GDX traded down to today's low of 102.54. It only recovered 3 points, closed 105.5. Okay. Big gap in the chart now that it's going to want to go up and fill. Suspect it might, even by later this week. That'd take us all the way back up to 111. Hell, it could do it tomorrow. So we'll see. Let's watch overnight. Okay? Again, the news is the news, and God knows how bad it could get. And I urge you to urge your family, regardless of what you think, just be cautious out there. Okay? Tell your family to do the same. Wherever you are in the world, Europe, Australia, wherever you're listening, Canada, just be careful. This is a time to keep your wits about you. We'll see you tomorrow. I'll have a post for you in the morning. I should tell you right now, I recorded an interview with a brand new outlet today that hadn't been on before, this Wealthian, whatever. It was a very good, they asked some really good questions. So that'll be your thread in the morning. I'll build that tonight. That'll be your thread in the morning. We'll have a podcast in the afternoon. No midweek conversation this week, just a regular podcast. Today will be a lot like today. Hopefully prices will be better. Let's put it that way. All right. Look sharp. See you tomorrow. It's Turd Ferguson signing off. I'm out.